All right, good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and it is Friday, September 20th, and this is your end of day video. Just a reminder, video is for information purposes only. There's the disclaimer, so there you go. Just wanted to show that in the beginning of the video. So let's go ahead and we'll talk about the week, and today was option expiration, but also quadruple witching. Markets basically closed right around the low of the day. So it did look like we had some selling pressure at the end of the day. This week was pretty tough, I think, trading wise. If you go and you look at the 1 hour chart, again, the value area is giving us really the best signals. The best signals, I think. We started the weekend value. We explored basically all sides. This was on FOMC day. Then yesterday we got to the top of value installed, and now we're back towards the lower end. So that's sometimes how it works, and this is just feels like the market has been moving this way for a good portion of the year. Even though the S&P is up, how much is the S&P up this year? Let's see. Let's go to SPY. We're up 21% year to date, right? Which is, surprising a little bit considering that we've had a lot of months that have been really choppy. And, we know markets don't go up or down in a straight line, but up 21% year to date. And it'll be an interesting end of the year, I think. But so here we are for the week. Great in hindsight. 2020, great week to sell premium on both sides or fade moves, which is really difficult. I think that so many of us want to see this market get going and trend a little bit, including myself. It's really difficult when you get these weeks where you start to go one way, and you completely, give it back and go the other way. That's just very, there's no trend when you're doing that, trendless, sideways. Next week, however, there's a pretty narrow value week, excuse me, a pretty narrow value area for the week. So we could see a big move, and it doesn't necessarily mean it is to the upside. We could spend some time down here, and we've got version point of controls down here. Remember, a couple weeks ago, we had this value area is even tighter than it was here. But remember, we did have a nice week as well that week and the week after that. So again, sometimes that can signal this we went all the way, started the week below value, and had a huge week from down to the highs, and that was a reversal type week. So be aware of that. Again, you could see this value area is very, very thin. I could try to show you another one too, but I actually can't find one that's right here. So again, also signaled a pretty powerful week, right? So about the same size or same width, I think. If you look over here to over here, and we had a big week here. So I don't know. The hint, be mindful of kind of where we open for the week. Again, it doesn't mean that we go that way. We could pass through this value area very quickly. That's also, it doesn't have as much relevance. Like this week we started in value and stayed in value. This week we could bounce around back and forth before we actually give a direction. So that's the 1 hour. Again, the 1 hour giving, I think always, using the value areas gives you some good knowledge there, or good signals, I should say. So we did stall out. We hit this 30, 22, 25 level like we did last week and stalled after, a tremendous swing up. And we're kind of back into this. Again, remember how choppy we were back here. I was talking about this pre-market, in case you missed the pre-market session that we do. Talking about how the barrier for a long time was this 29, what was it, 29.35 level. So it seems like we're doing this again. But I don't know. We'll see. I try to remain optimistic. I didn't like the market breadth towards the end of the week. We also saw a lot of things kind of break down, right? When you look at if we're looking at the S&P, And if you look at the top names, now I could be, reading into the price action on a quadruple witching day, but you had some breakdowns, and some things like Netflix. Listen, Netflix, once this thing, I don't, I've been saying basically since they reported last earnings, and they got out of this range, but there's lessons to learn here. Somebody had asked me, to post the Netflix chart for them, somewhere back here, and I said that I think this thing could get down to, which I still do, 254, 255, which is the bottom of value for the year. But I said, hey, we could bounce a little bit before we did that, and we did get a bounce right into that 20-day moving average and failed. So, big move down. These stocks move really quickly. It seems like once they fall and once they break trend, like Roku, for example, just completely obliterated this week. A couple things on the 1 hour. Um, you know, it went right past this VPOC without any hesitation at all. Again, it's another way to kind of notice how these VPOCs work. Sometimes if you just blast right through them, you can continue to go down. There is another one down here. There's also one on the 5-minute bar. So again, why these things are important? They're big volume areas. That's why, and price will gravitate down to big value areas. So this one was taken out. There's one down here at 93. Now I don't know for sure. The closer you get to them, the more gravitational pull and the more chance. I think the more probability that you could go ahead and take one of those out. But I think there is one at 100 on a different time frame. Anyway, let me get away from this. I didn't want to go that far into this one, but it's just interesting to see that. So note for S&P, there are a few ones down there. And like things like Amazon, which saw a pretty decent size call buyer earlier in the week. This thing fell to 1794 on really no news. And this was a name that I got long. I was looking for this to turn the corner. Interesting, again, Valuary is giving a good signal that it didn't have it today. But very similar to other days, we seem to go one direction for the first 10-15 minutes and failed at the top of value, could not break that, and then fell apart the remainder of the day. Look at this. I mean, this, of course, there was the news about China not going to Montana. You kind of have to think about that next week as well. We spent a lot of time talking about rotations last week. There certainly was. But one of the things that if you didn't see this stream that I put out on Twitter last week, I was talking about how many of the rotations looked like they were based on trade. The fact that the two parties, went from Nowheresville for the possibility of a trade deal to possibly getting a little bit better. The week before we saw things like steel names rally, we saw gold miners fall, and then this week it was the opposite. So, sometimes those rotations are, hey, people are really underexposed to some things, and they need to get a little bit of more balance in their portfolio. So let's just recap. So again, I looked across, 4 different groups within. Sorry, not 4 different groups, but I looked at 4 different sectors. I looked at tech, hardware, and software. I looked at materials, steel names, and miners. I looked at 2 other areas too. What were the 2 other areas that I looked at? Tech. I think I looked at biotech and medical devices. What else? And I looked at 2 other areas too. Anyway, it's not that important. But performance for the week. Look at the solar names this week, and the gold miners did come back with a vengeance. Interesting when you look at the top performance. SPYs. This was the first down week that we've had, I think, in 4 weeks. SPY went down 1% for the week. Small caps, which were up 4% last week, gave back 1.2%. Really, the biggest move reversal was the bonds. Bonds were down huge the week before. Uh, you know, uh, so they actually climbed back 3.9%. I think they were down 6% the week prior. I just tweeted this out. I should know it. But pretty strong move back in the bonds, up 3.9%. Gold also up 2%. But yeah, I mean, the dip was bought in TLT, right? That was a big ramp here at the end of the day. And if you look at the weekly chart here in TLT, big sell off in bonds last week. Uh, as it was a bit more, it was risk on. But look at them climb back here, and even more evident in the long bonds. You had 5 straight candles in a row, and back in value. So if you like bonds here, they did a little bit of a fake where they broke the 50-day moving average, but sometimes you see that, right? Shakes out the all the weak hands. A lot of outflows in some bond ETFs. Maybe some money went right back in today with the trade deal probably falling a decent amount. So again, that's probably, now that we're through option X, quadruple witching, Fed meeting, I think what's going to be front and center is what happens with this trade meeting and whether they leave on good standing or if they take another step back. One step forward and 2 steps back. It seems like these trade discussions go. So pretty ugly stuff. All right, just glancing one more time at sectors. What did well? Some of the things that did poorly the week prior. Again, defense names. Biotech did well this week. Software bounced back this week. And some of those really strong things last week gave it back. Look at regional banks were down 2.3% after a big week last week. International, remember, European financials were up huge last week. Nowhere to be found. No continuation there. This was pretty, well, I was going to say pretty split, but you had a lot of the emerging markets. Look at Hong Kong. It was down 4.2% this week. Also South Africa, China A shares. Again, you've been hearing, like if you listen to CNBC, they've been talking about call buying in ASHR. There's also been inflows into that ETF, down 4% for the week. You would have been better off not listening to any of that. So again, flows. We talk about this a lot in the trading room. Flows both on the ETF side that I look at as well as option flow. Sometimes they can point you in the right direction. Sometimes they can point you in the wrong direction. So keep that in mind. Also thinking about next week, right? If we happen to go a little bit lower, some of the trades that, for example, I may have started this week. I try to really trade lightly this week. Friday or today, I didn't trade much at all. I just thought it was too challenging to trade with the headlines and so forth, and market breadth just looked like, even before the trade headline, it looked like it was deteriorating before that. So if you start a trade, really kind of think it through, and if you're going to kind of hold through the headlines, because it takes a lot of conviction to be able to kind of hang on to some of these trades with these all kinds of headlines that we're getting. So keep that in mind. Before you take a trade, if you're just following option activity, or if you're in the spur of the moment and you think it's a good trade, try to think it through like a game of chess and think about moves ahead. Are you going to be able to hold this trade if there's trade headlines and this market falls? What are you going to do? If we get a major dip, are you going to throw in the towel, or are you actually going to add to that position? Because I think really that's the way that you have to kind of really manage your emotions a little bit in this game. And for me, scalping has worked a little bit. in the last week, but as far as swing trading, swing trading has been extremely difficult. I'll leave on a positive note. One area that's showing, which I was looking at last week, biotech really didn't do much. I would keep this on your radar next week. 84, I'm rounding up. 84 would be your breakout level. But also XLV was showing some strength. Now it did fall apart at the end of the day too, but it seemed like there was some strength under the hood. I'm still holding on to a starter position, again, just a starter position in Bristol Myers, BMY, as this tries to retrace. Also things like Etsy, not Etsy, sorry, Zoetis. ZTS also looks very strong. All right, and what else can I say before the end of the weekend? And then just try to follow the areas that are trending. There are areas that are trending. Unfortunately, it may not be in the most sexy things in the world. Look at Procter and Gamble, the weekly chart of Procter and Gamble. I mean, you're kidding me, right? A perfect 45-degree angle up and to the right. So these things are continuing to trend. I don't know how long they're going to trend. No one ever knows. No one has a crystal ball and knows how long things are going to trend for. But also look at USMV, minimum volatility equities. They did not have any major rotation out of them. Either did Procter and Gamble, by the way, the week prior. So you just didn't see that. All right, guys, we'll leave it there for the weekend video, and have a great weekend, and I'll see you guys on Monday.